Welcome back. I'm Michael Bull, and this is the Commercial Real Estate Show. Today we're talking about the U.S. office market. My guest is Barbara Denham. She's an economist with Reis. Barbara, thanks for joining us.
You're welcome. Good to be here.
Well, Barbara, some people think that the office market should not be doing that well. You know, we keep hearing that people are working at home, they're telecommuting, they are sharing desks, they're using less square footage per person. But, what do you see? What have you seen so far this year for performance in the office market?
Well, we're seeing a flat vacancy rate, which has been driven by low net absorption offset by positive construction. So the good news is developers aren't overbuilding, and net absorption has been positive. So demand growth is there. It's just been much slower than we had expected, and it's a little bit slower than it was last year. And that's why the vacancy rate has stayed flat. It's about 16% right now, which is not great when you think about how long we've been in this recovery. But again, it should be going down further. I think most of the recent quarterly market trends have been driven by the first quarter, which was very muted. There's a bit of a delay between, say, job growth and economic performance and office leasing. And the fact that the job growth has picked up in the second and third quarter, we will see stronger net absorption in the fourth quarter this year and perhaps the first quarter next year.
Well, that would be good. Do you expect that there's any relation to the office market vacancy and performance with the contentious presidential election we're having, or any of the business owners and leaders kind of looking at this and going, wait a minute, let me see what's going to happen?
Yeah, I think there's definitely a bit of that. There's not a lot of pressure to get a lease signed this month or next, so tenants are really driving the show here. I don't think landlords have as much of a hold on the market as tenants do. So, yeah, to the extent that they can put off making a leasing decision until after the presidential election, I think we're seeing a lot of that in the third quarter.
Okay. And you talked about 16% vacancy overall, and that's for several classes around the country. For our listeners that are driving down the road, maybe they're in another sector, 16%, is that pretty normal historically, or where does that lie there?
Well, we've been in this recovery now for not seven and a half years, and to only be at 16% with this deep into the recovery isn't great. I think we've seen vacancy rate go below 10% in prior recoveries. But I have to say, rent growth has been positive, and the fact that the office market has been growing at a slow and steady rate, it means that rent growth has not accelerated. It's steady, but it's not stellar. It's not robust. And that means it's more affordable for more users. So in a lot of markets, when rent growth would grow, it would increase 5% a quarter, 10% a year, it would drive out a lot of smaller businesses. So I think this is a healthier market overall. That being said, I think 16% is surprisingly high given how long we have been in this recovery.
Okay. You sound like our tenant reps here at our shop. So what do you expect moving forward for performance?
Well, I think one trend we've seen over this recovery is the square footage leased per added employee has fallen, and I think that trend will reverse. People have been sharing space, and landlords have been leasing less space per employee, but at some point that's got to give. So we do see net absorption picking up. As I mentioned, job growth was very strong in June and July. That should continue in the fourth quarter. So we see net absorption picking up on a absolute level and also on a relative level. We think with the job growth, landlords will be leasing somewhat more square footage per employee.
And do you think that's because of recruiting and retention, because the job market's improving? Why do you think companies will use more square footage per person?
Exactly. I mean, consider space like an amenity. It's like, wage growth is going up because the slack in the employment supply has run out. So the, employers have to, pay their employees more because there's more competition. The unemployment rate is lower. And they have to offer more amenities like space and,
elbow
things
room.
Like that. Right, elbow room. So, again, and the millennials who tolerated smaller space, they're getting older and they want more elbow room, as you said.
Yeah, well, it makes sense. Well, what are you seeing in the investment market, and what do you think we'll see moving forward there for the office sector?
Well, and investors, they like the office market. It's not as strong as the apartment market. Cap rates have been low, but they're not trending lower like the apartment market is. There's some risk in the overall global economy. It started with Brexit. So we've seen office cap rates stay flat, whereas apartment cap rates have been falling. I think the foreign investors prefer the apartment markets, but we're still seeing plenty of office investors in a lot of markets. A lot of it is geographical. Some markets are just doing better than others.
Yeah. What are some sample cap rates you're seeing in the office market?
About 4%.
Wow.
4 or 5%. Yeah, it's pretty low, but it's, again, apartment market's about 3%.
Yeah. And so if you looked in your crystal ball, 2 years from now, office cap rate, what would you expect?
Well, it depends upon interest rates. If interest rates go up, that's a very positive sign that the economy is doing better. And if the economy is doing better and interest rates go up, cap rates generally go up a bit. That's because of the cost of capital that goes into the calculation of the cap rate. So they could go up, but again, that's not necessarily a sign that the risk has gone up. It's just more of a sign of the interest rate climate.
Right. Well, good point. Well, Barbara, thanks for joining us on the Commercial Real Estate Show. We appreciate you being with us.
My pleasure.
All right, and stay tuned. We're going to have more on the office market. And next, I'm going to talk to a guest who's going to help you, if you own commercial real estate, to talk about ways to increase NOI through more effective leasing. If you own commercial real estate, finding the right tenants, finding more tenants is really the name of the game. So stay with us for that. I'm Michael Bull. This is the Commercial Real Estate Show. We'll be right back. Hey there, thanks for checking out the Commercial Real Estate Show. Don't miss a video of special interest to you. Be sure to subscribe below. And if you appreciate the videos, be sure and thank our sponsors. There's a link to more information about them in the description. For more videos, podcasts, and articles, check out creshow.com.